I'm Keith McCullough, and welcome back. Today's closer is a good friend of mine, somebody who is, you might feel, I don't like the feels word, but you might feel like you know them. You know how that is when you're watching somebody a lot and you really like them? It's not me I'm talking about Mike Taylor. Thank you for making it in here.
I should have worn more cologne.
Yeah, you look good, man.
Thank you, sir.
Yeah, well, it's good to see you.
It's an honor to be here to help with the process.
Yeah, and with the cause, Pink is crushing. There's no one who combines your process with, there's a lot of alliteration here, process, Pink, and for the cause, like really. I mean,
invest for the cure.
I love it. It's and you've crushed the field. If you go back now, was it 4 years officially? I think.
Yeah, we just crossed October 8th. 4 years we launched Pink, the ETF, nice. And it's a healthcare focused. That's really my specialty for the past 25 years, and we're very pleased with the performance. And we plan on doing a heck of a lot more moving forward.
You should be. You're not allowed to talk about performance. So you know what I did, Mike? I put the performance chart up there. So I can talk about the performance chart. Now look at, that is an absolute annihilation. Like it is just not even close. I mean, if you're outperforming by 500 basis points, I'd say that's a win for the cause. But this is its own cure. It's called alpha, which is, by the way, today, just in advance of this, this morning you had another stock market sell-off. What was the first thing that I bought this morning? Healthcare stocks. Yeah. It was at this time that we sat down last time, it was the sector that I was shorting on every bounce. Now, this is the number one sector that I bought Pink. People saw that because I show my portfolio every day. I actually even don't tell anyone, but I bought that XLV thing that you're smoking. So I better get rid of that soon.
Probably.
Probably.
Well, as you know, the XLV won't have alpha names in it. You're really going for sort of a market cap, large cap move in this. But Pink is just chock full of alpha. In fact, to get the performance like that right now, not all the time, but right now, it's an extremely idiosyncratic book full of alpha ideas. And if anyone wants to know what my greatest ideas in healthcare are, for the most part, they can just look every day on the website and see what I did.
Now
and there it
again,
is.
The ETF business, I actually understand this. I mean, you have to post your positions at the close every day. Can you imagine if we got to see Steve Cohen's book every day? Or anyone you worked with, or if I could see yours, now I can't see
Now
yours.
you can see mine. So when I do things, I frequently will get a whole bunch of phone calls that night when it posts, and I'll get phone calls from my friend. What are you doing? What do you think? How did you do that? What do you see? And that's just part of my network of my contacts for the past 25 years in healthcare. They went, look, they can see what I'm doing.
Yeah.
My clothes are off. Right?
Well, you know where you're sneaky though, in the night.
Oh.
But you, when it all comes off, you go in there and you're sizing. You're really good at getting these sneaky pops in position sizes because it looks to me, it's not an optical illusion. You don't have like set position sizes.
No. And look, I'm also one of the largest shareholders in Pink. So maybe the viewers don't know, the net fees from Pink and my compensation goes to the Susan G. Komen Foundation for Breast Cancer.
Right.
So you really are investing for the cure. But you get to keep all the returns. I do it for free because I'd be doing this anyway. If I wasn't doing Pink, I'd be trading this stuff anyway. So I might as well make this, one of my biggest personal positions in Pink, so that we share in the risk and we share in the gains. So my compensation is the performance of Pink.
I love it.
And it goes to a great cause. And I'm honored to do it, and I'm so glad that we could put up, 4 years like that. And that was part of the business plan. The business plan just said, bullet point, total annihilation. Turn the page. This page is left blank for a reason. That's it. So.
No, you're right though. And by the way, the portfolio manager move today was to just increase. I'd already bought more Pink. It was already positioned. But it's just increasing exposure to a sector style. Yeah. That's like it's a brain dead move, but it's what I did. When you look at the broad equity.
By the way, I have to interject though. By the way, your macro process completely nailed this move in healthcare. Smoked it. Absolutely smoked it. And I have to iterate to everyone that I started using this process in Hedgeye when it was new, years and years and years ago. And it had a profound impact on how I managed risk and how I sized. massive. You put that together with Mike Green's analysis on the passive flows, which he and I really started talking about 15 years ago. He had seen it, I had seen it. I changed my book to accommodate those sort of passive flows, and it made a profound difference in my performance. So I put together that, Mike Green's thoughts, Hedgeye's process on the quads, and then alpha on top. Well, my performance is, yeah, there it is.
I mean, that's what I mean, I often get the feedback from institutional investors that we use it to augment what we're good at.
Yes.
Because what we're not good at is macro. It turns out that you're very good at macro too. I think that this is part 2 of your career, hopefully of many, many parts. But but you've always had, maybe go through that like within the lens of what we do next in this market. Like first of all, why is healthcare part of this new broadening? Why is it breaking out? What's breaking down against it? Why? Like how do you see the current?
There's 2 reasons why healthcare is working. Number 1, the political negative comps are like unbelievably bad. Post-COVID.
Easy comps.
Yeah, from right here moving forward.
Yep.
It could not have been worse, where healthcare is the worst performing sector for 3 consecutive years. I'm not sure that's ever happened before. It's certainly not in my 25-year career. And at the same time, fundamentally, we're in a golden age of discovery and development.
Yes.
And what people don't understand is that we're at the start of a golden age, where I don't see how it ends. Meaning, where's my speed bump? Where's this crest? Sort of things like that. When I started doing this, and I did drug development before I did this, I'm a scientist. When I started doing this, we had pills and this new thing called an antibody. That was new. And now we have a dozen mechanisms to deliver some sort of therapeutic something to somewhere, whether it's gene therapy or RNA therapy or combinations of the two attached to each other. Complicated stuff, complicated to make, complicated to deliver, but with incredible results. And we're on an on-ramp where you can go from a concept on the whiteboard to a drug tested in humans in like a 3-year window. When I started, that was like, if you were lucky, 8 years. So compressed from idea to human. Very fast now. And it's only going to get faster. So you get more and more and more shots on goal.
And AI's got to augment that.
Yes, it will. It will. In my view, the AI for science is actually going to be, what's going to augment is the academic part. You may not know this, but scientists spend an unbelievable amount of time reading basically nerd stuff, okay, and looking at charts, all right? But the most difficult part to it isn't reading it, it's assembling it.
Yes, yes.
So you spend 50% of your time finding all this stuff and then reading it. And now you can just be like, get me everything about blah, blah, blah with a reference and blah, blah, blah. Click, it's there.
Yeah.
Holy smokes. So you're able to pound way more information into your head in a shorter period of time to process it. And that's the real benefit. So the idea on the whiteboard gets better. And that's really, that's kind of like in a nutshell what I think is happening in healthcare. Also the comps politically couldn't be easier. We're just past the, oh my God, they're going to eliminate healthcare. Oh, I guess they're not. So we're at the, I guess they're not phase. So now, at the same time, in my view, the consumer is kind of entering a realm where they're going to get smoked horrifically. So you have, very bad numbers over there, and a space over here, healthcare, that nobody owns. Literally nobody owns it. And
it's again, when you make these turns sector to sector, for me, that's the game, right? Like I got to get that right.
Yeah.
So thanks for calling that out. But if you look at, you can talk about any single stock, the answer may not be your biggest position, right, in terms of conviction, because you could have a more speculative best idea that excites Mike Taylor on healthcare innovation that you have to size appropriately. Can you talk about those things and a stock maybe that
Sure. Well,
like super growthy.
Yeah, no, I can do that. I can do that, and we have a number of them in the book, and I think that they're sized appropriately. One that I have in the book that's pretty sized, actually quite a bit size now, is that plastics company that I've talked about before. It's really a recycling play called PCT.
Yeah, nobody's heard of it, Michael. So it is.
So maybe some Hedgeye folks have heard of it, but
it's had quite a run.
This is a very, very, to me, an exciting moment for PCT, where it goes from fake company to real company. And this is really where a lot of money is made, where the risk comes off the table. As you know, they have a process, they recycle polypropylene, but what many don't realize about this is that they are the only player in the world that can do it. We have a polypropylene market worldwide that is going to be around 300 billion pounds of polypropylene a year, in everything, probably in your glasses, in my glasses, in bottles, in cars. And none of it, or almost none of it, is recycled. And certainly none of it is recycled to a high quality like what PCT can do. And so what you have is a white space. That, like for instance, polyethylene, this is made of polyethylene. Yep. I know my plastics now. I can just look at it and I know what it's made of. That's horrible.
It's one of your many talents.
Yes. That 15% of all this is recycled. And so, like for instance, if PCT can get to, let's just say 10%, right? 10%, that's 30 billion pounds of recycled polypropylene. Now that'll take years for them to build the capacity to get there, but a $2.5 billion market cap stock is not priced for that.
No.
So right now they are working out deals to fill their capacity at their first plant, which is really a pilot plant. It's only going to be $120 million in revenue, but it makes them profitable. And at the same time, they're going to be building in Georgia, in Antwerp, in Asia, in Thailand too. And the plants that are coming on for the next gen, because you learn a lot when you go from a pilot plant, a big pilot plant, to a super plant.
Well, this is where the stocks, like this has been a volatile stock. This is where, if you actually think about it from a normal business building perspective, you should have the most like fuck ups and hiccups and everything because it's your first one. Is that right?
Yeah.
And then you get it right.
Not
like
only
Ray
the
Kroc's
first one,
McDonald's wasn't the nicest thing.
It's the first one of something that's never been done before.
Right.
So there's no proxy. And that was part of the problem, the fuss with it, is that there's always naysayers when you have something that's completely new.
Yeah.
But I knew 5 years ago when I first looked at this that the chemistry completely worked. It was actually very simple. And I was kind of stunned that nobody figured it out before. But if you think about before, nobody cared about recycling plastic before. Now all of a sudden everyone cares. Not only that, it's getting written into state regs across the country. 1% of what you're doing has to be recycled polypropylene. By the way, there's only one player, PCT. That's it. Same thing with Europe. Europe would like to see 20% of all the plastics, including polypropylene, being recycled. Holy cow, where they're mandating it or you pay a tax? That's PCT, there's one player, that's it. So filling the backlog right now for this first line in Ironton, Ohio, is a big deal. And the naysayers will say, there's no demand, nobody wants it, the market's not there. And I was like, what are you talking about? Polyethylene, they do 15% of the market right now, and that's just because it's difficult. It's going to end up being a lot more over time here, and it's shared by many, many players because many players can do it. Yeah. Whereas PCT is going to be one of one. That's it. You want polypropylene? One phone number, buddy. That's it.
That's good.
And it's going to, in my view, stay like that for a very long period of time. So I expect in the next 1, 2, 3, what's today, 14th? 14th. All right, so within the next month, we will start to hear about deals on offtakes for this, and then that's it. Turns into a real company. It's also one of the largest, most shorted companies in the stock market. So
we like
it's
that.
Probably about 45% of the float is short.
Well,
and it's actually more than that because that float, the owner base, and I know who they are, pretty much all of them, they're not selling. So it's really concentrated. That float is very, very dangerous for a short.
From a market structure perspective, this is perpetuated like our quad 3, 2, 1 count. There is no better count for you to get Cornholio on the short side than a 3-2-1.
Yes.
Short squeezes happen because, again, if you think about it, you have
And what's Q1 looking like?
quad one is Goldilocks.
No.
That's
Q1 next year.
Yeah, that's
what quad?
Quad one.
Okay.
Because we get to compare against quad 4 last
Yes.
year, which was the dark sister of quad 4 or of quad 1 is quad 4. So it's just like, okay, now you lap that, and voila, we got like this great economy all of a sudden. A lot of people have been betting against it. They've been betting on recessions. They've been betting politically. They've been betting and betting and betting, and they've been betting wrong. And the increasing squeezage we've seen in small to mid-cap stocks is partly why to own pink. It's unlike XLV, which is all large caps. I mean, you have a lot of SMID in there.
Yes, at this moment I do.
Yeah.
I haven't at all times, but right now I do. Interest rates are going to go lower. If the viewers would look back at 2007, this very similar setup happened in 2007 as the economy deteriorated and interest rates started to drop. Mid-cap biotech went to the moon.
Yeah, that looks good too. Even IBB looks good. I mean, which is like that's like Lazarus, biotech. So you got that. What else on your?
So it's very exciting. I wanted to finish out on this though. That's very, very important for the next lines that are going up. They believe, and I agree with them, and I don't know if they've been very vocal about this. They believe, and these are super nerd plastics guys, so they really know what they're doing. They believe they're going to be able to make their recycled polypropylene for less than it costs to make new polypropylene from a petroleum producer.
Cool.
That is unheard of, and it's actually not hard to do. It's very exciting. And we've never seen anything like that before. And everyone is going to find this stuff out over the next, between now and March.
All right. Let's do one more stock and then we'll get into big macro topics.
Sure.
I know you have a couple thoughts on China.
But
another stock like that's in pink or otherwise that you really like that's new? She doesn't have to be new.
I mean, I will tell you, I have, believe it or not, so I have a stock pick that is not in pink because I do a lot more personally than just
you think?
Healthcare and stuff like that.
What a guy though! Like you, how many people would come in here and pitch something that's not in their book, right? Like you're gonna just as in your PA, I assume, but it's not. It's not in your big pink book. Yeah. So it's a different sector.
Well, totally different sector.
Okay.
But I have so many, like I'm very bearishly positioned, Carnival, Cruise Lines. I know that you were, and actually the fundamentals, certainly, they can't get any better. Mm-hmm. That's it.
My signal's bearish on Carnival Cruise.
Okay, well, I mean, I don't want to talk about Carnival, but for instance, they have an 18-month backlog with premium pricing, right? It's great, it's fantastic, it's never happened. But most of those clients that are in that backlog looking forward to their cruise, they're all targets of AI. Button pushers that are going to lose their job. And the moment the Carnival comes in and says, things are awesome and we have just a tiny bit of cancellations, the stock will be like, but they haven't said that yet.
No.
But I believe that they will. And otherwise everything looks great. But that's what I'm always thinking about is what can they be missing? Right? What can the street be missing? The management's super bullish, doesn't get any better in this. How can I put a trade on and to protect myself in an alpha way where nobody sees it coming? Mm-hmm. And so I spend a lot of time just thinking about that reading. But I do have a long for you. It's actually AI related, believe it or not. and it's an energy side of the AI trade. There's a little company in Texas. It's called T1 Energy. And you probably never heard of it.
What's the ticker?
The ticker is TE, Thomas Edward. Oh. It's 500 million market cap, and they have the distinction of they are very likely going to be the only other solar panel maker versus First Solar that receives the tax benefit from sales to, let's say, industrial ends. And there's only going to be two players, those two, for a period of time, maybe 18 months, 2 years. They have bringing on 10 gigawatts of production capacity, sourcing the little solar cells from Corning. So it's mostly American made, and that it hits the criteria so it can get the tax refund for all the clients buying, which is really attractive. But first solar is, hanging out about a $25 billion market cap with 26 gigawatts of production capacity. TE, over the next 2 years, is going to get up to 10 gigawatts. All right, so it should be trading kind of at a 40% relative market value to its competition. And that, that's a 20x.
20 times?
Yeah, from 500 million market cap to 10 billion. Now, let's say I don't know, it doesn't get there, whatever. Okay, it's 10x, fine. I don't know,
Two times. I like two times.
Right. But the big catalyst, it's actually like people don't realize is pretty like low bar, is getting the actual official tax recommendation. That's called a 45X. They have names for this stuff. But I've talked to an awful lot of people through this, and I think there's an extremely high probability around the end of the year they are going to get certified for an American-made item, and then they will be able to sell with that tax benefit moving forward. So it'll be kind of a duopoly. But unlike the others, they're bringing on a lot of capacity right now, their first big capacity. And making solar panels is not really rocket science. So the sort of like technical bar to getting there is not too bad. And honestly, I know the founder, I know who made this, I know who put it together, I know how they put it together because I've known these people for 15 years. And he honestly thought that this was going to be a zero because he thought it was going to be an energy play that was only going to work under Biden or Harris, a real green agenda. And they got unbelievably lucky. It's a $3 stock at 500 million market cap. They got very lucky that Trump said, US only, keeping the tax benefits in there, and they just happened to be the right company at the right time, in the right place. And I called my friend on the phone, and after this happened, I was like, oh my God, you're so lucky. And he goes, better lucky than good, my boy. Better lucky than good.
Well, that's
it. And I was like, all right, and there it is. And so there's going to be sustainability to this because for the AI consumption out there, meaning build out, and that consumption of that energy, you got two choices that you got to use both. It's gas and solar. That's it.
It's, again, if you are from the future and you believe it's going to be quad 1 by next year, 3, 2, 1 on quads, and you throw in the big themes of made in America, tax benefits, CapEx ready, also expensing. There's so many themes that quad 1 is going to end with, and that one circles a lot of them. So I love hearing ideas where you're like, okay, this is what I think the future is going to look like, and the market agrees. And then all of a sudden, you just keep layering in tickers, because you're really good at this.
It takes a while to find it.
Well, I mean, for you,
and then you got to call and do all the work, make sure it's going to work.
But you're big on that Made in America theme.
Yes. Yeah. Well, you have to be. You have to be. So I think that TE January could be, it's $3 now. I think it'd be a $10 stock. And it's really just taking the implied discount that's really big and start taking it down. You get your tax benefit, okay. You've finished the build out of your manufacturing facility, okay. You make your deliveries, okay. And so the stock works up as that implied discount comes down. So, not terrible rocket science. And so far as like PCT's upside, that's really a much more like long sustainable story. Like for instance, for PCT, after this plant is filled and they're building the next 3 lines outside the US and then more lines here, then it's 10 more lines and 20 more lines. I don't see how there's a negative comp for PCT in our lifetime. And that's really hard to find for a Russell 2000 stock, where my estimate is I don't know how it has a negative comp. I don't know if I've ever been able to say that before.
Oh, you just did.
Yeah,
you just did. So now we beam me up, Scotty, is the way I think about it. And very few people in macro can do what he does, which is go from micro to macro. Because to understand how good a micro idea is, you need to understand that beam that is all your macro factors, right? If you're going towards quad 4, that shit ain't working, right? If we're going into like 2022, quad 4 recession. But one cannot have a beam like without seeing the China view. How do you China, you have a very, I would say, non-consensus view right here, like especially when it comes to timing. So do you want to go through that?
You remember when I can't, it was probably the middle of the night, I texted you and your partner, and I was like, I think she's in real trouble.
Yeah.
Yeah. And
I was in bed.
Yeah.
You go to bed later than me.
Well, sometimes. So, I try to go to early, but I get fired up and I can't stop. And so I read a lot, right? And the whole thing about China and Xi is our Treasury Secretary truly believes, and I might interrupt negotiations because of this between them, but he thinks Xi's like the most dangerous person on earth, and I agree. And they would very like to get rid of him. The military would like to get rid of him in China. The 1,000 dynastically wealthy families in China would like to get rid of him because he spent $1.5 trillion on this Belt and Road Initiative. He's never getting his money back. That's out there. And he's going to lose Argentina in a matter of weeks. That's going to be a U.S. player all the way. China's out. They have a bit of a little military base there that's going to go away.
So that's partly why Bessin's so cozy with Milei, not just that he
likes you think that's part of the plan? Do you think that this is all happening right before their plenum next week for a reason? I think so. Scott doesn't do anything by accident. No, he does not. So
the plenum is
the plenum's coming up in about 9 days, and I believe, and I guess this is kind of off menu, many have not talked about, it's not in the mainstream media, right? Because that's not what they do. I think that there's above a 50% chance that Xi walks away at best stymied, where he's not exactly in charge anymore.
Really?
And that will be profoundly different in who you're talking to and what's going on. There's also a number of alternatives where he doesn't walk away at all out of this. It's very, there is but they want to make it look graceful. That's what they really want, is a graceful transition. And I don't know if they'll be able to do it. So it's going to be, I got the popcorn ready. This is amazing what's going to happen in China. Because think about it like this. You have an economy over there that has 41% of its GDP is CapEx, all right? And they have massive underutilized capacity everywhere. How do you keep building CapEx in order to fortify that GDP when you have nobody using the CapEx that you built? What do you do? This is the conundrum that she is in.
And your biggest buyer is going on a big strike.
Yes. And so he's in it. And look, it's a classic disaster of all command economies. Misallocation of capital. You become the kingmaker of everything, but it doesn't meaning that, okay, we're going to be the best in EVs. Great, they're the best in EVs. What's the margin on EVs? Less than zero now. Well, that's the problem. You just deployed a ton of capital, built it all out, you built the best widget out there, and now what? You don't have pricing. So now you don't actually have a business. And that's what happens in command economies over and over and over again, because it's all top down. So that's what he's enduring right now. And the Shanghai gang, which has been, on the outs, it's really Shanghai versus Mao. Mao dominate the world, and the Shanghai guys are like, yeah, that's great, but I want to get rich, and they don't feel that way. So there's an awful lot of pressure on Xi to be gone.
How do you think that plays out in markets?
It is going to be, actually, if Xi is out or compromised, and we have new guys showing up, even as a new guy behind the curtain, everyone will figure it out right away, like right away. And I think there's a high probability there. It's extremely bullish for China because all the foreign capital is gone, just vanished from China, get out. So that would be a big positive. Open markets, better contract law, things like that. There's one sector that will actually benefit a lot if Xi is out, which is pretty astonishing. And it's the education stocks, the Chinese education stocks. If you recall 5 years ago, Xi said, education is unfair. All the smart people are getting educated, pay a lot of money for this. We don't want that anymore. No more education. And so all these stocks took a 90% dive. It literally happened.
We used to cover them, and then we discontinued.
Yeah, that's exactly. Yeah, and there's one. The ticker is TAL, T-A-L.
Okay.
Thomas Alpha Larry.
And it's ticker day with Mike T.
Well, you asked me, so I just I'll just tell you a situation. And I don't think I have a position in this. I'll have to check. If it is, it's not material. And Tal is, that's the great, for me, I'm thinking this is the trade into the plenum. Because if she is gone, these education stocks are going to frickin' take off because they're down 90%. All right. Now, Tal is in the KWeb. That's the ETF for tech stocks there. It's over 2% in the KWeb. So if they just come in and buy the KWeb, this is going to lift with it. Yeah. So this is part of the Mike Green thing. Like if you want to own a big idea, make sure it's in the benchmark, in the index, where the money's going to go. Because at first people won't be stock picking, but they're going to pick this one because it's a $6 billion market cap and it has $3 billion of cash and it's profitable. And it's trading about.
So it's not a fraud, it just got neutered by
It just got neutered. They had to right size the business. It's profitable, it's okay, but it doesn't have explosive growth because she says school is bad. But if she isn't there anymore, school's good. And it's trading at, if you take the cash out, it's trading at 10 times. I'm like, okay, let me write that down. So so I'm like, that's my she trade.
How about all the...
Now you could also just own the KWeb, but
right.
I can't, I gotta get in there.
You gotta get in there.
And now people own Baba. Baba's 10% of the benchmark, that'll work. But I'm thinking about what's really going to work. Baba might be up 30, 40, 50, 100% on that sort of thing with the markets opening up. But this education stock, it could be 8x.
Oh, so here's a good example of how, if I don't have that view, which I didn't until now, and I'm not saying I have the view, but I have the perspective, the lens of the view. Before yesterday, sold all my China.
Yep.
I'm like, fuck this.
Well, it's breaking.
I'm not, they have quad 4 on my nowcast coming in the first quarter. The USA has quad 1, the opposite. And this is enough for me. I just don't need this. It's been a huge run. I've been long China for a while here off the lows. Signaling lower highs. There's enough we know that Trump's going to win this. And it has to be bad for China. But I never put in it's so bad for China that Xi's gone, therefore it's good for China. So I could come back. I sold my Alibaba today in real-time alerts. Everybody saw that. But if I could go back, I wouldn't have sold it. You see, how you changed me? You've changed.
Well, we have a potential big catalyst.
Because all I have to do is wait a week, 9 days.
I think it's 50-50. And it's kind of like last time I was sitting with you and I was like, well, we were tariffs. It was tariffs. Tariffs was a disaster, right? And I was like, I think he's gonna backtrack tomorrow.
Yeah.
And nobody sees it coming. And I didn't know the market would be up 8% the next day, but I'm glad I had the bet on, right?
No, because you bet in Canada we have a place that's actually called Taco Time.
Yeah.
It's kind of like
that was the original taco.
It's the poor man's Yum or Taco Bell, and it's somewhat predictable, like Trump.
Now it is. We didn't know then.
No, then
that was the first taco.
But you were like, he's easy to understand. Yes. I know what he's going to do.
Yes.
So you still think? Obviously you'd still think that. What is he going to do? Play it out. Okay, Xi gets neutered now instead of the education stocks, and what's Pump going to do?
Oh no! This is a gravy train with biscuit wheels, my friend. Okay, because. And I tweeted about this. People may not realize if this actually does happen, that Nobel Peace Prize should actually go to Scott Bessent, because we talked about this before he was even a candidate for Treasury Secretary.
Yeah.
Hedge fund guys sitting together. How do we do this? If I was it, what do I do? And I told him, across the board, 10% tariff on China might be enough to break China without actually damaging the U.S. at all. Because they can fix 1, 2, 3, 5 companies, but they can't fix them all. And he figured out that what the limit was. And the limit was, we can actually get away with 50% tariffs and not hurt America much. So this is a real press to get the military to fix this Xi problem. He is a danger to the damn world. And he's lost them a ton of money. So why don't you just get rid of him? and we can move on and actually make some real money and do some good things for your people.
Well, many leaders, former leaders in China have been killed.
Most, in fact. And there are a number of rumors out there about Xi's health. There was a rumor last week, decent source, had a stroke. And Xi has not been seen since then. So it's been about 4 or 5 days, and there's nothing.
So what if you Jedi mind tricked it and go to the net and say, okay, now he's going to pretend he had a stroke because he's going to step down gracefully?
No, stroke means he's dead. He's in the morgue. He's already dead.
But he wasn't seen because you can't really tell that there's nothing wrong with him. What's really wrong with him is he's getting neutered. He just wants grace walking off the stage.
I honestly, I cannot tell. I cannot tell. I cannot tell. I'll put it to you like this. When I see it, I'll know it.
Yes, okay. Well, so why is the Western, I mean, we know why MSM is so fucked up, but I mean, why is Western media, like, you don't see this view anywhere? I don't need to see it to believe it. I just...
As you know, investigative journalism's dead. That's it. They don't get paid to actually do what they did. They're getting paid. They're given a bullet point. Here's your narrative. You have someone on the plus, someone on the negative. They fight on TV. Click, click, click. Next. That's it. That's how it works.
Mm-hmm.
You know, this actually will require an incredible amount of thought, digging, and working in a very opaque system. And even if you came up with, well, actually, you could come up with an awful lot and have a story, but they don't get paid for a story. They get, you know, a bullet point that was spoon-fed to them by the White House, get 2 people fighting online, next. You know, it's all 15 seconds. 15 seconds, that's what you get. You know, it's TikTok. And if it doesn't work for TikTok, nobody's watching it, right? So that's it. And this just takes too long to explain. So just don't do it. Remember, their job is about selling reverse mortgages, right? For that 3-minute segment between people shouting at each other.
Yeah.
That's their job, is selling that's you adult diapers, reverse mortgages, you know, that's it. That's what they're selling. So you got to keep them there, keep them hooked, keep them sucking that up, and then on to the next segment. That's what they do. Figuring this crap out, this is for people who make money.
Yeah, okay.
Yeah.
Okay, so another big pump topic. For those of you that don't know, I just call them pump, but that's fine. It's okay to think for yourself. It really is. Everybody loves Apple, and they forget, like, the best marketing message they ever had was, like, think differently. God forbid you actually do that in your life, you know, like corporate America. But, you know, here we are.
It's very hard.
But
given Mike Green's passive, which is a huge passive investing, and I encourage all of you to find Mike Green, read his work. He's going to be coming out very shortly with a best-selling book.
Oh, right.
That was #1 on my prediction list, which Twitter has now taken down because they didn't like my prediction list.
Isn't that, I mean...
I couldn't believe it. Someone just told me it's
First
down.
of all,
I was like, what?
I thought you were joking, and then I looked.
It's gone.
Can you believe that? Like, I'm really trying to, in the words of our younger team members, have positive vibes these days. Like, I am very positive about my family, my firm, my friends, our future. Actually, I don't think I've ever been this positive. But I can still get you angry, right? Like, that should anger people. Mike Green and Mike Taylor. Mike Taylor has his top predictions on the sitting in the same seat. They were so bloody accurate and so inconvenient truths relative to what the powers that be for Elon Musk saw, that they took the fucking post off?
Yeah.
Like, that's enraging.
I didn't even know about it. Somebody
Like,
brought it up to me.
You typically don't get very mad. I mean, you've gone through, like, this epic healthcare recovery of your own. You're, like, probably like, okay, let them. But
honestly, it's not for you. I feel bad about it just because other people can't read it now. So that's all. I feel bad about that.
It's bullshit.
Because it is somewhat entertaining.
but it's ridiculous.
But I'm surprised. Okay, you know,
it's ridiculous.
Look, we have a number. The problems that are going on right now, worldwide, are not going to stop because of the fourth turning, and this is all part of that, and it is part of controlling the narrative. We have a huge problem worldwide. Less so here, but everywhere else in an industrialized world. And that is the birth rate. The birth rate is doom, absolute doom. And there's no way to get out of it. there is going to be negative aggregate demand in Europe, Asia. Well, that's enough. Europe and Asia. Minus India, there's going to be negative aggregate demand no matter what for the next 50 years. Or, well, let's just say the rest of our lives. I might live for another 100, but we'll see.
Yeah, that's right.
And that's a huge problem. And so it's all about control. And it's going to be all about controlling narratives. It's going to be about government spending. I mean, right now we're at an incredible moment in time where the GDP of the industrialized world is determined by how much the government will overspend. All of them. That's it. That's GDP. And that's a kind of a weird input for your model, because your model's a economic input, right? And we've never had an instance where for 15 years now in a growing fashion, it's government and government fill blank. That fill blank is what makes GDP positive. And I think Rosie was just on with you, and he was talking about he articulated extremely well that this economy is not growing outside of AI. And if you actually comped out or even tried to make the budget balanced in any way or that, we'd be in a horrific recession, even remotely close, the worst, depression. And that is the case for everywhere else in an industrialized world outside of India. So that's a really difficult spot to be, but it makes sense why. It's because we have an aggregate demand problem. And the government is overspending in order to make GDP positive.
Yeah, it's crazy. I mean, and if you think the problem, like you said, to your point, you stopped at Asia and Europe, which is a pretty big circle. Actually, just do the biggest country in Europe. Germany's GDP growth rate is currently 0.5%. That's where they are before they slow. Okay,
Yeah.
Like the U.S. economy is running around 2.5% year over year. Canada 0.4%. Right? These are socialist countries or left-leaning countries that have huge dependence on that. No innovation. So they don't get that piece like that Rosie was talking about or that everybody knows, AI, and hence the market caps embedded therein. But the rest of the world's demographic problems look the same way. You get this. Like to me, the question is sadly, when the inevitable becomes more obvious to the political, people incite wars, right? They incite they're
terrified of it. This is what we talked about 4 years ago when COVID hit.
This is what happened to Russia before he incurred.
That once they started spending on COVID, they would not be able to stop. And that's what's happened. We're at the spot where they cannot stop spending. Because as soon as meaning government's overspending, as soon as they pause it, we will have negative GDP or even flat GDP. You can't have flat GDP without a giant bond blow up. Meaning corporates. Because if you have zero growth, that means some companies will be profitable and many won't. And if many won't, that means bonds blow the hell up and you start the cascade. And that's why they cannot have a recession ever again. Hence, gold is at the moon. And Bitcoin, except for recently. But I totally understand why. And then you say, well, when can the governments not spend like they've been spending? Well, it's starting. UK, France. Japan. They're at the spot where they cannot have price discovery on the long end of their government bonds. Cannot do it. And so they're moving it to shorter end. All right. That lasts for a while. But you already hit the wall in those countries right now. Hit the wall. And I don't know what they're going to do. Well, that's not true. I do know what they're going to do. They're going to print money.
Yeah.
That's what they're going to do. They're going to print money to keep this thing going because the alternative is the aggregate demand, which is negative, will become exposed.
Yes.
Right? And you cannot do that. So my only thought is, and this is a macro sense, I don't know if it's this quarter, if it's next quarter, it's just at some point in the near term, we're going to have a decision tree of do we have a crisis and then print, or did they just start printing?
It's interesting, if you just take, I even got Rosie to at least somewhat agree with it, just the base effects. So again, you go quad 3 to 1. Quad 1 ends at the end of Q1. And then you start to get closer to quad 4 by the third quarter of next year.
Well, it's going to be a doozy.
But you could have, if all this happens in between, including the G walking of the plank, the perp walk, whatever you want to say it ends up looking like, and you have these super easy compares because last year the stock market crashed during that GDP slowdown between, we're basically in the first quarter into the second. You get through all that, like if I'm looking for a spot where all these bubbles, should start to stop going up, pop, then drop, it would be into that with panic rate cuts.
Yes.
Because panic rate cuts are different than, I get to cut interest rates into an economic quad 3-2-1 acceleration. That's what we have now. That's the best thing that you could have, is an easing Fed into what has been a slowing economy most recently, especially during the government shutdown, and into, guess what the catalyst is? The government reopens. And then we reaccelerate for 3 to 6 months. And to me, like if I had to pick a spot without having, because I don't have a signal to get out yet. Today's 1 hour bear market this morning wasn't it.
I missed that.
Yeah, that's
I was driving up here.
You got Micro Marco, all these guys that want to be famous in macro talking about how all the structural selling's going to happen. It's like read artwork, okay? But to me, that's where I'm going. And I'm trying to think it through. Like, to have the crash, you have to have the bubble at Rosie's like, well, the Cape's 40. And I'm like,
yes.
Yeah, but it went to 44. 4 more turns.
I agree with
in
you.
1999,
I agree.
You can go higher.
Picking tops is very hard.
Right.
But
the economic conditions, reopening a government, my quad count alone, with, again, that's ahead of the midterms. It's got all the fun stuff from Trump, including the CapEx expensing, the rate cuts, new Fed head, and tax cuts. I mean, that if you're looking for a spot for this to keep going up, it's in the next
the tax cuts in the front half.
3 to 6 months.
Yeah, I agree. I think that we're going to have a doozy of a 1Q. Consumption's going to come back hard just because people are going to get a free check and they're going to spend it.
And it's against last year's collapse.
The comps are super easy.
So
we agree margins, the whole thing.
We don't always agree on this. Like when he and I don't agree, I think most people know that I walk my dog after the close and just try to clear my head. But if he calls me, I don't get to do that. And I keep going around and around, and my dog keeps wondering, when is this walk going to stop? Because he will not stop. If we disagree on something or an item, like how it kind of, it's not always the case that we agree on the timeline.
Yeah.
Right?
Yeah.
So this is very bullish, but then get me to talk about taco time. The one thing the guy has not chickened out on is going after the Fed, like cutting rates.
True. Well, I also think we're very likely in the very near term going to get an effort to revamp the housing situation in the U.S. We have a ton of inventory out there in housing, and I think that there's going to be a material expansion in the size of Fannie and Freddie. Now, I don't know.
You have a ton of land or a ton of inventory or both?
Inventory and housing.
Yeah.
You also have the silent inventory that's sitting out here where people would love to move, but they can't.
Yep.
And it's really just about yields. Now, it'll happen, I think, when the economy blows up in the back half of next year, and then rates are going to go down, and that will be actually a lot of pent-up demand. But I think knowing Trump, that he really wants to grease the skids bigly for the midterm elections, and so you really need to start to do that now on a big expansion of Fannie and Freddie. If you recall, they talked about they're going to announce an emergency in housing in the fall. Literally, they talked about this.
I thought that was going to be, like, I got on the call that morning, I was like, this is it.
This is it.
The U.S. government land bank, they're going to come up with a bunch of new things that you never thought of.
Yeah.
I mean, Fred Trump taught pump. I mean, he did this with...
And that could be one of the mechanisms, because you have to think about it. If you want to get it through Congress, you don't want to get it through Congress. You have to make it balance sheet neutral, meaning it's just the government taking on more risk with their balance sheet, but that's balance sheet neutral and guaranteeing more loans, bigger swatch, stuff like that. So an expansion of Fannie and Freddie would be one of the mechanisms to do it. So that's really what I expect. And I don't have any insight. I talk to a lot of people, but nobody knows what.
But that would happen before the midterms.
Yeah.
All the good stuff.
I think it's going to happen this fall.
So last year,
and we're pretty much into the fall. So
last year going into the spring, all the bad stuff was going to happen on tariffs.
Yeah.
All the band-aids are going to get ripped off. All the slowing was going to happen in the GDP. And this year, against those easy comps, you get all the nice stuff, all the candies and goodies that they want to have for the midterms.
Yes. And don't forget the Trump checks.
Trump checks
from the, that'll happen for the general election.
The general.
The general election in 2 years. So we got Trump checks for the big 800. They'll have over $1 trillion at that point in time from the tariffs. The tariffs income. So we're going to divvy that. If the economy gets bad enough, everyone got to check with Trump's face on it. It plays well at birthday parties.
This is what drives people bananas, right? Like, because you get them to the end of the movie, but they don't want to watch every episode in the series in between. But you have to watch them to get there.
And they'll do that. Like if the economy stinks and the general election's coming up, they'll do a money drop. I mean, it's about winning.
Yeah.
Gotta win. So again, we have more like you and I just talked about, like 1 billion tradable events that are going to happen over the next year. So I am very excited. I'm like terribly concerned about how this is all going to play out with the demographics and aggregate demand and the government's overspending. But just, my God, how many trades are in between?
Oh my God. Okay, so now the last topic, we only have 8 minutes. I feel really bad to ask this, but how does this end for these poor retail investors?
Do you play poker?
Not a lot.
All right. I was at an investor dinner last week on Wednesday, and there was about $300 billion of investor money in the room, and we were talking about long shorts.
It was institutional.
Institutional money, but big money, a lot of vanillas that are active managers, endangered species, and it's like a museum. And I was like, have you guys noticed the vol in options? And they didn't, because they don't really look at that. These are all long guys, they don't realize it. But I had a hard time finding calls for any name that was like sub 50 vol. It was like 50 to 100 for everything.
Oh yeah.
Everything. And I did the back of the envelope, and I'm trying to figure out how, why, whatever. And I looked at all of these double long ETFs, Tesla double long, IonQ double long ETFs, these single name things. These are all owned by retail, all right? And I looked at the option value that's in it, because they're buying calls or whatever
Weekly
to lever
calls.
up, to lever up their position. And I just kind of went through, because Mike Green does stuff with a, freaking Excel and all that. I'm more of the napkin type. Like if I can't understand it on a napkin, well then it's not a good trade. And I looked at all these double long ETFs with the embedded calls in it at an incredible price. And I was like, holy cow, if these are just flat for a month, they're all going to drop by 15%.
Yes.
All of them, because the option value is so wildly expensive. And the only way it's so wildly expensive is that on the other side of that poker table is retail. And they don't know the VIG.
Well, they don't have the VIG that you and I had to pay growing up. And again, to be clear, for those of you that do identify as a retail investor, I think that's the greatest insult you could ever give yourself in your life. Call yourself a self-directed investor, a macro-aware investor, somebody who made a shit ton of money that isn't an idiot, anything that you can call yourself. But that is an old wall name to basically, Goldman Sachs is mocking you if you are called the retail investor. Don't be that person, okay?
They have a word for it.
They have an award for it now?
A Muppet.
Oh, a Muppet.
Remember that?
No.
They call you a Muppet.
But when you look at these things, the reason why, and it's 100% spot on options pricing, first of all, there's no VIG. You don't have to pay fees. Robinhood account, lock and load, right? We had to learn that there was a cost per option, per contract, right? Mm-hmm. Different. So there's no VIG on the front end, right? They don't understand what's going on in the back end. They don't know what the center books are doing with this order flow. Mm-hmm. But what we do know is like if I look at these, like I'm like you, I write it down every day. Yesterday, the biggest loser in the market, most active traded stock, was not a stock. It was, like to your point, one of these levered ETFs. The 3 times semis bear, because semis went roofies. SOXL.
SOXL.
It was down 15% on the day. So when you start to think about options volatility, you're talking about bid-ask spreads on the underlying that are wide, right? So people are like, oh shit, I'm buying the weekly calls, and you're gonna pay. And like single stocks, I mean so that thing was down 15% on over 311 million shares. Like when you and I grew up and we saw a couple million shares hit the tape, we're like, there's a whale. This is like an entire ocean of splashing whales.
Yes.
Like, but they're the retail community. BBAI, you know the stock?
I don't know that one.
It was up 22% on 211 million shares. Rigetti Computing, part of my quantum computing long, it was up 25% on the day on 181 million shares. This has gone Looney Tune.
Yes.
So you got Looney Tune, and people wonder why is crypto blowing up? Isn't there signal in that? Yeah, it's because that part of the casino just went cold. This part of the casino is real hot, right? Who's at the poker table?
There's also a physical reason. Like, think of everything as a vector. Why this is happening. The option premium that they're paying right now to buy calls, so forth, is so wildly expensive. Okay, like Susquehanna and Goldman Sachs are setting such an incredible price.
Do they do that?
Well, they do make the market.
And there's them. There's Jane Street. There are many more.
Yes. They're setting such an incredible price that they're thinking, and it's not just for those names though. It's for all the names, all the names. And so it's really a calculation, right? These people are coming in and buying, and they're kind of like, so they're buying these hot meme stocks in size, but they're actually kind of buying a little bit of everything, kind of at the same vol, very expensive sort of thing. And if you're a market maker in options, you have to hedge yourself, okay? And the gamma, right? But if the premium's so crazy high, and you know there isn't a catalyst, like the quarter or whatever like that, well, now you only have to hedge this much. Because the premium is so high, I have so much room to end up making this valueless at the end anyway, that I'm okay. But when it does have an event, then you didn't see it coming, or it goes up 25% in a day, all those market makers have to panic right on top of retail. And the FOMO, they're doing FOMO, but the actual market maker is saying, oh, Jesus Christ, I'm going to take a big loss on this. And they have to go in and buy the crap out of it all the way up.
That's the number one thing that people
because they're
don't understand.
under-hedged. They're under-hedged.
People don't understand the institutionalization of the options flow and the market structure that you just explained, with the retail community having no idea about those mechanics, but still having the speculation that drives these premiums and options and these wicked wide, risk ranges, as we call them, in price.
And it's a calculation. And the calculation is that, okay, I'm going to lose it on that quantum computing that day for this, and this. Yep. But the other 80 stocks that didn't do that but are priced at very similar premium, ka-ching, minted it.
I have a book that I built that I would not show. Well, my wife actually looked at it because she did her taxes the other day. She was all pissed off at me. She was like, because she has to submit it by now.
Yeah.
And if I told you how many trades I had, you would be even embarrassed for me.
No.
As a person.
No. We have the same number of trades.
But I have this micro book. So I just put 50 basis points in each of these things. I call them squirrels. But they're like in each topic. So the hot topic, I won't touch currently the Bitcoin sensitive equity basket. That's not hot. It's got to be quantum or it's got to be AI. Those are the hot box. So I got, X amount of tickers, 50 basis points each. So X amount of capital at risk. This is like fishing in the greatest part of Lake Nipigon, which is a great place up in north of Thunder Bay to fish. You know that a trophy walleye's in there. You just don't know which one. Mm-hmm. But you got to have all the lines in the water, and there are no, like M&R we call it, the Ministry of Natural Resources, no cops up there. So you can have as many lines in the water as you want. I wouldn't go with too many lines because I respect the fish. But anyway, it's crazy the hits that you get. Crazy. Because if you have the right inventory, as soon as that retail community decides that that's the winner today, it goes up from 5% to up 22, 25% on the day. And voila, you could be right on 1 out of 10 positions and cover the book. Now, if you're right on a day like yesterday, I'm right on every position. Huge day.
Yes.
But people don't understand how to make money in bubbles like that. I had to teach myself that.
Well, we've never seen this before.
We've
never seen this before. And the biggest risk to retail is AI, in my view, because the white collar AI market, anyone who's pressing a button is in trouble. And the next leg is going to be lawyers, accountants, as it gets better, as the AI product gets better. Mm-hmm. Now, I can't say for the outcome of who's the AI winner or not, and there will be several winners. There will be an innumerable number of losers because there's an enormous number of players. And it's going to compress over time. But it is going to change the job market substantially. I see it in my businesses right now, We do not need people. And that's what we're seeing. And you talk to a billion people like I do in businesses all over the place, and I don't know one of them that is not collapsing headcount because of AI.
So your point on my fishing hole and why it's so hot right now is that actually the market's got it right.
It hasn't happened yet, though.
AI and quantum, that is the future. You don't know who the winners are. But every day up until we decide that that's not the future, that's going to be where there's a hot game going on.
It is going to be a hot game. I think that this is probably still a viable opportunity if it ever really does go down. But I think that this optimization and productivity increase that's coming, and it will be substantial. It's going to be manifest largely by larger companies that can get rid of a lot of headcount. The problem with that is you can't retrain these people because jobs aren't there. They don't exist anymore. And it's going to hurt the revenue side very quickly, the consumption side, the credit side. And the fellows on the other side of that poker table that are betting on that stuff that you got all the fishing lines are, they go away.
Yeah,
and
that's going to be the end.
That's the biggest risk. It's coming very soon.
Yeah.
It's coming very soon.
To me, that's potentially, like I said, the timing matters on this. It's one thing to go fishing. Everybody wants to go fishing.
Yeah.
But as soon as the signal says that game's over, like it just did in crypto, like you just got to understand that and move to the next quad. Like that's why I keep focusing on like how much room do we have to run? Is it 6 more months? Well, maybe. As of yesterday and today, I'd say the answer is still at least 3 to 6 months. We'll see. That's the trend. So I don't know. You don't know, but thank you for making this think, man. Like I think we got to wrap up here, but every time I get an opportunity to talk to you, whether it's Walking Boomer or right now, it's just like I'm a pretty dense guy sometimes, so it lights up the lights, right? It's like at 50 years old, I need somebody to light the lights. And it's largely about connecting the dots, right? Like if you want to trade a full book, you got to have a lot in that thick skull of yours. So you make a lot of connections that I just wouldn't make. So thank you for that.
My pleasure. Yeah. I'm glad to share.
Yeah, he's the man. How good is he? That's day 1 of the Hedgeye Investing Summit. Please don't forget to buy the damn dips in pink like I did today for the fam, and we'll see you tomorrow.